Hey everyone, welcome to Money Wire Work. Today we're going to be going over a common pattern that I look for that could drastically improve your trading strategy. But first, I just want to get into SPY and Bitcoin and then circle back to that pattern. Now, I'll give you a little hint. The pattern is actually going to be visible in two different time frames, one on Bitcoin on a certain time frame and one on the S&P 500 on a certain time frame. So watch for it and see if you can spot it. So right now I want to start with the S&P 500 and we're on the daily right now. I drew these trend lines right here just to show the trend channel coming down. We can just get rid of this right here. Now we do have a resistance coming up on the S&P 500, right? It's pretty much hitting it right now at about 424. The current price action, at least on the Heikin Ashi candles, is 421.79. And then we're also below these moving averages. We've managed to go up through the 50 moving average and the 200 moving average. And actually today we did go through the 100 moving average. So right now we're looking for probably a little bit of exhaustion as far as the bull sentiment is concerned. We're going to have people taking profits at this point, especially up at this 424, 426 level. And whether or not we come back down and then bounce up to a higher high and break this channel, that's going to show sentiment to the upside. If we come down and even if we have a little bounce, but then we have a lower high and come back down, we could potentially see a newer low and the market could continue its bearish sentiment. So right now we're riding kind of high as far as bullish momentum is concerned. With the CPI data that came out yesterday, it was good news overall as far as the Fed and whether or not they're going to continue to keep raising interest rates and how aggressive they're going to keep doing it. But at the same time, we have people that have been riding up to that catalyst that are going to start taking profits. Once the news gets old, people are going to start to sell out. Okay, so I'm going to start back. I'm going to do Bitcoin and SPY both on the monthly for starting out. And we can get rid of that channel for a second. And we are on the Heikin Ashi candles right now. So as you can see, riding up the bull trend right here, we had all green candles and now we have all red candles and we have our first green candle. Now if history is any indication as far as the S&P 500, these smaller dips are usually recovered pretty quickly. You see green, a couple red, and then continuation to the upside. You have the same here. You had even a little dip here. Here there was sort of a double, but it didn't last too long. If you go back down to 2008, you have this long red downtrend, and you had this straight green uptrend, a little bit of a red, but overall our sentiment was going up to the upside. Now over here as well, it's a little bit different, because 2000, the dot-com bubble, was a little bit more drawn out. So you're looking at something similar to right here is what we have currently back over in 2001. So the fact that, people are claiming the bear run is over and we're going back to a bullish sentiment, that may be true, but you have to be careful. Don't throw all your money into it just yet. We want to come down, where we want to come up, come down, and then come back up and see a higher high, or a higher low as well, I should say. All right, so if we're going to go back to the weekly, it'll come a little bit more clear as far as what I'm talking about. So we just go all the way back down to 2008. 2008 has something similar to what we're experiencing currently. It was coming down, and we have these slight uptrends right here. So this very well could just turn back down to the downside. And some catalysts that could play into that could be, as I talked about yesterday, the unemployment is a lagging indicator. The housing market is a lagging indicator. If a month from now, and next time we have the CPI data, and it's higher than what we have right now at 8.7%, we could very much well see continuation to the downside. Just because we first had this inflection in inflation right now doesn't mean it has to continue. Let's just turn this log off for a second so you can see it a little bit easier. Now you can see right now we have a high spike. It dipped a little bit over here back in September of 2021 and then continued up, and you can even see there was a small little dip here, and this is the biggest dip since then. But coming back, if you look at inflation, I mean, we could see something like this where it comes down and then comes back up like we did back in the late 70s, early 80s. Okay, so just because we're on our way down right now doesn't mean it can't spike up and continue, and we could see a longish bearish momentum, but we'll pay attention to it and we'll see where it goes. So we'll go back to the SPY and we'll turn this log back on. All right, and we can go to the daily. The TSI is way overextended right now. It's hitting this red line, and we could potentially see a continuation to the downside. So if you're looking still to short this market, wait until you see the yellow line come down, turn into a red cloud, or even just the yellow line could be enough for you, and then that way you get ahead of the move a little bit instead of waiting for the red line and already wasted a big move. All right, we can go down. We'll go down to the 1 hour for the S&P 500. Now you can see right here, this was the change in momentum right here. So you had this coming down, you had the consolidation right here, and then you hit up above these moving averages, came down, bounced off the 50, and this was huge validation off of this 50, and that's why you continued to see this uptrend from a technical standpoint. It was came down, this higher high right here confirmed people that were still a little bit skittish to get in right here, or a little bit cautious to get in, however you look at it. And that's why you see this little consolidation right here. And then once we got up over that, the consolidation matched pretty much with this previous high. Once you got over that, you saw that continuation to the upside. We can just pull up the S&P 500 and look at it from the 1 minute time frame. It started out really strong, and then it just broke and it ended down on the day. Not really much going on. You know, this was a pretty good short right here. If you saw this coming down, and then you saw it struggling to get over these moving averages, and then once it broke back down, this would have been a good short. All right, we can look at Bitcoin, and we'll start with the monthly again. And if we just zoom in right here, and we still have the log on, the logarithmic scale, we're still in this red downturn, and we're still in this red downturn as far as the TSI is concerned. However, one difference is if you zoom in on this candle right now, this is a weaker red candle as far as the Heikin-Ashi candles are concerned, because it's sort of engulfed in a way of the previous candle. So that's showing momentum change. And if you were to just bring on the actual price action, this is what you're seeing in that current candle. Okay, so you're seeing that momentum change, but it's just not strong enough to create a green doji candle quite yet, or a green uptrend candle. But that's really how you see the sentiment change on the Heikin-Ashi candles. You're going to see, you know, red down, doji, and then the green candles going up. If you go down to Bitcoin on the 1 week, now, one thing I really like about Bitcoin on the 1 week is using these clouds right here, these EMA clouds, because it really does show sentiment of the market. If you just turn the price action off for a second, this was the bull run. This is the 2017-2018 bull run, where Bitcoin really went mainstream, I would say, for the first time, was during that run. We had this long bear run from 2018 to 2019. And this right here, this is an sort of underappreciated bull run because there was actually a 4x on that run. Okay. And then this was mainly consolidation for the most part. This is really the first time that you see choppiness as far as the EMA clouds are concerned. But it's still above this 50 moving average, and you can still kind of consider this part of the next leg up right here. All right, so let's just pull this back on for a second and go down to the daily. And we're still continuing to see if we just turn these channels on again. Oh, I think I got rid of them. But anyways, we talked about yesterday or a couple of days ago about these channels that were forming here to here, here to here, and here to here. And the difference between these three that we pointed out was that this was descending, this was mostly flat, slightly ascending, and this is a stronger ascending channel. So we're seeing momentum change right now, but we're not out of the woods yet. And we can just look at Bitcoin on the 1 hour too to just finish these two up, and then I'll get into the candlestick pattern. All right, so what we're seeing is we're seeing a strong floor form. You know, before the floor was about 1820, and now the new floor right now is about 22.4. Okay, so that's what we're looking at, which is parallel to this yellow moving average right here. So if you're still looking to go long in Bitcoin, you still are thinking that it's going to go higher, a good entry position is when it starts to come back down, maybe get back down to 2300. You could enter, and then you could play that channel, because if we bring up this channel again, it's so narrow as of late. But nonetheless, if it comes back down, you're still lower on the lower end of the channel, and you could ride that bounce up. All right, so the last thing I just want to talk about is that pattern, that trend pattern that I really like to look for, and that I really think can improve a lot of people's trading. So I want to bring up the S&P 500 on the hourly. Now, we talked about how we saw this sentiment change, and we talked about this right here. Okay, so something very, if you think about market psychology, people that are entering a trade want confirmation. Okay, so in order to get confirmation, you're going to need a bounce off of these moving averages, and ideally you want it when the moving averages are pointing upwards. Okay, so if you're following this trade, you're following at the S&P 500 on the 1 hour, it's consistently using these simple moving averages as a resistance. It comes up, and now this is actually the first time really that it uses it, these moving averages as a support. It comes up, it bounces off of this 50 moving average, and this bounce right here is confirmation that it's no longer acting as a resistance but acting as a support. So you see this high uptrend starts to sort of fade, and right here is the most, I would say, undetermined part of the price action, because it could just continue to fall through or it could bounce up. But if it bounces up, you know, a lot of other people are also going to be watching for that. And therefore, when you see that bounce up, you know that a lot of people are going to be going bullish on the market, and you could take advantage of that and ride it up. So what I wanted to show you is a similar pattern if you were to bring up the daily, and that's right here. We had a downtrend. We had the 25 and the 7 acting as a resistance, as well as this 100-day, and it's just way below this 50 at this point. Now, the 200-day still was acting as a support, but nonetheless, you had 1, 2, 3, 4, 5. 1, 2, 3, 4, simple moving averages acting as a resistance. It came up. You saw that initial bounce, like how we said before, came up some more, started to fade, and then right here again was the most undetermined point of the price action, because it could continue to come down, or it could finally start to act as support, like how we saw it here. And on this bounce up, and let's just say this one, for just to be a little bit more cautious, October 2nd, 2021 would have been a great entry to ride that all the way up. All right, so as you're watching candlestick patterns, as you're watching trend patterns, as you're watching certain tickers that you look at regularly on a day-to-day basis, watch for patterns. You know, we called out this pattern right here, how it was similar to back in 2000 as far as the S&P 500, where you had these long uptrends, then these healthy consolidation, long uptrend, healthy consolidation, long uptrend, and then the uptrends started to fade and fade and fade, and that started to change the tides to a downward momentum. We called that back way back in 2001. If you're not looking at your charts regularly and you're not studying them, you're not going to see those sort of things. So study your charts, know your tickers. That's why a lot of traders will have certain tickers that they only trade because they're that familiar with them, and they know how those tickers act, and they know the company. All right, so I appreciate everyone watching. I appreciate you tuning into the content. If you like the content, please like, subscribe, hit the notification bell, comment, all the like. I appreciate it. See you next time.